Hey, what's up, everybody? All right, this is Chef again, and we're coming at you guys with the weekly watch list, and we're gonna talk about this market just a bit, right? So, hopefully everybody had a great week. Past week was a little bit chaotic, a little bit crazy. Some upcoming news with the rates and oil just pumping up like crazy, right? But let's talk about some levels and let's look at the charts and the charts alone, right? So regardless of what's going on in the background, regardless of what's going on in the world or the economical movements and shift change within the earnings and everything, either way, no matter what, at the end of the day, please trade the charts alone and respect them, okay? If you are long and that thing is breaking down, cut your loss. If you are short and we are breaking up, cut your loss, plain and simple, right? If you're in the right direction, then just keep trailing your position. Anyways, let's look at forward slash ES. What do we have here? And let's point out what kind of candle we ended up this week, right? This week is an inside candle from this bullish movement the past 2 weeks. And we ended up inside, right? So inside because of the candle body, as you can see here, where we closed right here at the bottom, 37.70. And we opened right inside the candle. So it's almost like an inside candle. It's awkwardly inside. Now, what I want to point out is the characteristics of forward slash ES. And just so you guys know, we are still in a bearish market, okay? Try to push up right here with a doji, drop down. From the beginning of the year, we've been red. Here, again, almost like a hammer type candle here. Try to push above, and then we got smacked down, and then we got this. Again, we try to get a nice pullback here, a nice reversal, but it didn't happen. It still trended down. Here again, we're on the same page again, same boats. Last week we ended strong, and then this week we just shot all the way back down. A lot of you guys are gonna say because of the rates and because of this and because of that. Well, whatever it is, look at the downtrend. We're still on a downtrend, guys. Okay. So no matter what, everything is backed up by the downtrend. So anything catalyst related, it's just an extra confirmation to either go short or go long, whatever reason it may be, right? So anyways, what we're looking for this week, we're going to look for two levels and two levels only. This next candle can be like the rest. So what I want to point out is the characteristics, right? Every time we get a nice solid green push, we have a nice green market and everything's trending, everything's fine. Then we get that nice red candle, right? So the next one always comes up red. The next one always comes up red. The next one always comes up red. So just want to show you guys what it looks like on the charts alone. This week is a little bit different because we opened right here, right next to that candle. We opened right below it, so inside, and then we closed inside. We dropped down and we snapped back inside. So my question is, what are we going to do? Are we going to trade sideways? Is this going to be a slowdown? Are we going to find a balance here into the end of the year? Are we going to stay between that like 4K to 36? So we can definitely stay here to the end of the year, which would be okay. All right. This would mean that there's a slowdown in the market and a accumulation that's going to happen, a rebalance, everything that the Feds have wanted. It's going to basically just kind of hang in here, which is, like I said, I'm okay with that. I have no complaints if we stay range here and just kind of go up and down, so we can trade that up and down that range. If you don't know how to trade that up and down, then I suggest you take some time to study and learn some levels, right? But anyways, I can't really give you too much levels here just because we have this. As of right now, that 37.70 would be your support, and that 39 would be your resistance, right? 39, 39.20 area. But like I said, we're probably just gonna hang out around here on the weekly time frame. Okay. Now I want to show you the 4-hour. Okay, because the 4-hour is going to give you much of a little more understanding of balance. What do we have here? We just literally had a break of trend. So based on like what the Feds were saying here, we finally broke this little trend. That's what people are going to look at, and that's what it looked like that day on was that Wednesday, Thursday, Friday? Yeah, Wednesday. And then this thing just collapsed. We pushed up in the beginning for the reaction, and then ended up with the drop down with heavy selling pressure. Okay, so here, what you want to do is you want to do that again, that 37.70 area. Well, let's just do 37.73 or 72, whichever one you feel most comfortable. And 37.23 is going to be your little base. So break here, going up, break here, going down. Very simple. Just keep these as your entry levels for direction, whether up or down, that's how you target. And then you target just those top bases. Here you go. That'd be your 3860 level and then your 3920 level. That's how you would target something to the top. And then to the bottom, you would just grab this piece, 3650, and then this little bottom piece down here around 3580. And then you would target 35. So that's kind of your levels into the week using the 4-hour time frame. So like I said, even if we stay range, even if we stay in here, it'll be okay. We don't necessarily need a direction to move like it has to break down. It has to be a drop base drop or it has to be a drop base rally. It doesn't have to. Remember that. All you got to remember is that once we're below that level, drop it down, take your profit, scale out. Drop it down, scale out. Same thing. Ride it up, scale out, ride it up, scale out. Okay. That's how we ride these movements. All right. So that's forward/ES for you guys. Very simple. Nothing too much to overthink, nothing too much to overanalyze, just some simple levels. All right. That's that. So now what I'm going to do is I'm going to give you guys maybe some charts to look at. I think a lot of the earnings for the main tech names are basically done. So what happens afterwards from here on out, who knows? Okay, we just gonna look at some levels and we're gonna look at some charts to look at. For me, my biggest thing right now is gonna be the chip sector just because it's so beat down and they're finally having earnings. But there's a lot going on within those charts. All right. So the first chart that I'm gonna give you guys. Yeah, let's just do that. I'm gonna skip all the other breakdowns and give you charts because that's what we're gonna look at. Let's look at AMD. AMD is gonna be the first one, right? This is what I'm talking about, and this is what I like. Every time we trend, okay, I'm going to show you guys, we ended up breaking, okay? And then here, I think it was like a rising wedge or something. I don't know what it was. I think it was a rising wedge, yeah. It was this right here, and then it broke down, okay? And then again, we broke down. But again, it's just, I'm showing you guys the patterns recently that have been playing out here. We kind of had this nice little channel thing going on. And then we broke down. Here, same thing, kind of had a little pattern going on right here, a little base, and then it dropped, and then here, and then you can see it, right? Now, the difference now is that we just had earnings and we did not drop any further. That's the cool part. That's the amazing part about this AMD. It may or may not have found the bottom. Who knows? All I can do is give you guys the demand levels where it kind of shows accumulation, and then you guys go from there. So here's your demand from that 5650, okay? Let's do, yeah, right there. All right, so all this right here is your demand. All right, that's your demand right there. These are just the snap downs. These are your market manipulations. And here is the meat of the bone, right? So right there, in that 58. There's some more, this is your accumulation phase right here, okay? The cool thing about this is that it went a little bit higher. So we can grab this piece up top all the way to that red candle right there for that earnings. Boom. All right, so this is the piece that we need to break. So that's 63. Okay. Once we start breaking above 63, this is what I'm looking for. I don't know if anybody entered calls, but that's kind of what I'm looking for, the break of 63. And I want to go into the next structure. The next structure above this 63 is none of this little stuff right here, but technically right here at the 66. All right, now I'll show you why. Here you go. And then here is the area where kind of chilled, 68, 72, and 66. So this is where I plan on going for AMD. If we continue to stay within this range and break above it. So I'm looking for this move right here. Okay. How we get there, how many days it takes, I don't know. I can't predict the future, but I can definitely predict where the next zone would be from zone to zone, and that's why I'm considered a zone trader, supply and demand. Here is your demand, here's your supply, here's your break above into the top supply, and that's your take profit area, okay? Very simple. 66 would be your scale out, and then 68.80, 68.60 would be your take profit. Anywhere in this zone, you want to take your profit and don't buy longs here just yet because we don't have a pattern, we don't have accumulation built. All we have is a nice run-up staircase pattern into it if we do get that, all right? So that's your AMD over that 63. If you wanted to dip buy this thing, I think 60 would be a good level. 60 to 61 is a good buy level. Below 60, I wouldn't touch calls just yet until we get to this bottom of like 57 or 56.50. Now, the thing here with NVIDIA is that we do have earnings coming up and we do have this nice little channel for NVIDIA, okay? So I want to make sure you guys see this channel first. Here's your channel. That's the channel that's there right now. But I also want to point out that we broke above, okay? And we built a little structure here. We broke above, and then we don't have much structure coming into these levels. So whatever happens with NVIDIA, I think it's just going to kind of just chill in this area between like, what is this, 146? I'm going to use this top right here. Okay. That 145.80, just solid 146. We might just chill in there into the 130 until we get into this earnings. So whatever happens, guys. Just be aware that the IV might increase pretty soon. If you go look, yeah, we're at 69.75. This IV, I can almost guarantee you guys that this will probably hit like 120, 130, or even just 100, right? As we get closer to the earnings. If you are bearish, your position you should enter around 45. If you're bullish, you should enter around 130, just to get some good price points, and while the IV is low. But that's why I'm gonna keep my eyes on NVIDIA. I want to see if it's going to continue to run up or just kind of just mess around in here where I can use these same levels, these 139 and 145, 146, 135, 130 as entry points, whether it's up or down, right? So INTC, let's look at this bad boy. What I like about INTC is that it's an awkwardly bullish pattern, okay? So it's like an awkwardly bull flag, right? But if we can stay above 28, I just say just anything over 28, I will be bullish as long as the sentiment for AMD, NVIDIA, a lot of these chip stocks get a nice push up, right? So I say that above 28 just because of this little piece here, okay? As long as we're above that, we should be okay over 28 to go long and build a little staircase pattern into the top of this, which is your 29.30. It's a small ticker, affordable for anybody to take this, whether you want to take a swing or not. It's very cheap and anybody can afford it out there, right? It's INTC. Next one is going to be MU. MU is almost similar to AMD, the structure that it has. The difference here is that, again, we're like on this nice little channel, this respectable trend. And then we also have like a huge base that's being built here. So, I mean, I would extend it. Like I said, I would extend it for you guys just so you can see a visual. It's all just kind of like cluttered in there. This is called accumulation. Most of you guys will say it's no direction. But if you don't understand accumulation, you won't understand what direction means, nor would you understand what supply and demand is. This is called accumulation with a nice channel, a nice trend. That's getting a lot of the sentiment from the chip stock. So that's why I'm saying that because they're so beat down and because they're catching up to all your indicators and it's creating a lot of indecision. This is the accumulation phase that we want to see as traders, as a supply and demand trader, that I don't use indicators. I don't use any catalyst to help me. I basically go off the chart that's being built here. So the longer it goes range, the longer you say that there is no direction, the better it is for me to take a perfect trade and catch a nice little breakout, or just simply buy at the bottom here for a run up, or buy at the top to a run up down. Vice versa, if it breaks down, puts. If it breaks up, calls. I did enter a lead position on this bad boy. I think I got like a 65 call for like a couple months out. So we'll see how that goes. I don't know where I'm at right now. I haven't looked at it. I don't need to, just because I am swing trading for a couple months. Okay. But that's what I see with MU. If we could start breaking over that 56 or even just 57 in general as a whole number, we should be okay to run back up to 60, 62.50, and even 65. Okay. That's why I grabbed that lead, because this is your top target. That 64 to 65 areas, like that little supply area after we break out of this accumulation. Okay. The next one is going to be Tesla. Tesla is an amazing ticker still, and it's fun to trade and it has a lot of volatility. Here, I would just want to mention it's already charted, right? Here's your supply. I really did take this call here into that 237, so I swung that. I think that was like a nice over 100%, I believe it was. Don't really recall what it was, but I swung it overnight, which was fun. But now I'm going to show you now where it's at. So we're at the bottom of the base right here. Here you go. So this is the bottom of the base. If we start breaking 204, okay, it's going to get a little hectic. And then from there, I will be input. So this is going to be a Monday trade. Now, based on the pre-market, wherever we're at, that's where I'm going to go long and that's where I'm going to go short. Why? Number one, if we break over the pre-market high, I'm going to be long and I'm going to point out, the move up. If we do break down from this, that 204, then I'm going to be bearish all the way to 200. 200 is more of a psychological number, but also these orders were filled back when we did drop and we rallied all the way up into 233. So we could experience the same type of movement if we hit this 200 and bounce back up, or technically we are still staircasing down and we create a new trend and we break below 200, and then people are going to say 190, people are going to say 150, people are going to say 100, whatever the case may be. If we do give up all this base here, all right, I want to show you guys. If we do give up that whole accumulation phase, you're going to expect to see a nice candle like this, candle like that, and just a heavy drop. All right, so be ready if this thing drops, collapses, be inputs. Okay, if we do break and the market is breaking down as well, the futures and everything, and the VIX starts riding up and there's some like bad data, by all means, let's ride those puts to the downside. So use your psychological numbers. All right, so for example, break 204, scale out of 200. From 200, you want to go 195 and 190, 185, 180. That's how you want to trade this, okay? Otherwise, if it closes down below 200, swing that thing all the way and just write it on down, okay? So this should be a fun one. The next one is going to be SQ. I think there's a lot of strength in SQ, but we're going to have to see. Same thing, accumulation, all right? This thing is building sideways here. Like I said, most of you guys will say that it's no direction, but again, it's called accumulation phase, right? This is what makes the perfect trades go long or perfect short, whichever one comes first, all right? So just set your alerts. Start setting alerts at 62 to 65 or 61 to 62.50. If we start to break above and stay here, start trading in this area, then that's why I'm gonna consider going long here. And then I'm gonna go short here, okay? Otherwise, be patient and wait for that like 54 to 52.60 or 53.70, just a 54. I would use a solid 54 as your base right here. All right, that's SQ. So we're going to wait for this thing to pop. The target would be 66, FY. There you go. That's your target. 65 to 66 is your target right there. Boom. The bottom of this little base right here, okay? All right, so that's SQ. The next one is going to be SHOP. So I'm giving you guys a bunch of tickers that already had earnings other than NVIDIA. So what is it? This is a weekly and 4-hour retest, okay? So again, here's the top of the base, here's the bottom. This is where we broke down. We came back inside, broke above it, came back down, and now we're retesting again. So as long as we can stay above 30 and 31, we should be good for calls. If we can't stay above, it's just a retest and it's a failed retest and we'll drop back down. Very simple explanation here. Go long when we hit 31.30, stop out right below, right? I hope that makes sense. All right, that's SHOP. Next one is going to be Nike. I want to point out again, the nice, amazing channel here. All you got to do is trade it over 94, okay? 94 long, 94 short. So use this as your pivot. Wherever we're at, whether we're pre-market, if we're right here pre-market and it breaks above, go long, okay? If we're right here above pre-market and we're breaking above, go long. All right, if we're right here at pre-market and we're short, below 94, go short. Okay, very simple explanation. Hope this makes sense to you guys. If you don't, please message me. All right, that's Nike. The next one is going to be more of a patient play. It's going to be FTX. I want you guys to set alerts, all right? Because setting alerts is very important. If you're not setting alerts and you're not ready for this, if you're not patiently waiting, if you don't understand why the accumulation phase is so important, then you're going to miss a big move, okay? I talk about accumulation, supply, and public participation a lot for you guys. So you guys should be able to understand if you're following a lot of the videos, right? So over just the 160, 150, 162, you want to start setting alerts. As you see, I already set mine right there. 162. Once we start breaking above that, you're going to look for an upside move, whether it's going to be a public participation phase or just a simple breakout. So you can see all this. Boom. A lot of people are going to call this a gap. I don't look at gaps, guys. I think it's ridiculous. But if you guys are making money off those gaps, by all means, keep doing it. Or the break of 150. Okay. The 150, again, is your other alert right there. where you said we're kind of building a base. Like I said, since earnings, we just been trading sideways, and we want to get that break above or the break below, whichever one comes first. All you gotta do, like I said, set your alerts, guys. Set alerts. TSM. I did swing this the other day. Took some profits. But again, we're back at 62, 63. If we can break 63 or 60, 62.80 level right here, I'm gonna go long. All right, all the way into that 66. Like I said, I'm looking at a lot of the chips. I think the chips are in good places to start thinking long versus thinking short. Yes, there's supply issues. Yes, there's demand for these things, but because of the supply issues, it's still very bad in general as a whole. So for these companies, things are not looking great, but they're looking good based on long-term things, in my opinion. You guys do your own research. If you believe in it, believe in it. If you don't, then that's fine too. I just don't believe that shorting the bottoms makes sense. I think buying calls at the bottom just makes perfect sense on risk to reward plays. Okay. So that's what I'm looking for. If TSM breaks above, I'm going to probably find a dip buy around 60. I'm going to use 60 as my dip buying opportunities every time I see it. And then 63 as the breakout opportunity if it arrives. Okay. That's how simple this one is as well. Let's talk about Meta. Meta is something that's beat down to the ground. This is literally almost the same price as Snap and Twitter. How low can you go? Well, this thing can go to zero. But I want to show you guys the trend line here. Okay. Break above the trend line, long, break below, continue downwards. You guys do your research on this and keep it as simple as that for Monday. Okay. AAL, another one that's kind of been trading sideways, accumulation. Again, 1450. I'm going to use the wicks on this one because there's just so many of them. So 1450, set your alerts. Whether you catch it or not, that's going to be on you. 1450 to 15 and all the way to 1560 and 16 can be a nice move for AAL. Okay, set your alerts at 1450 or even at 1440. It's a small mover. It's a small ticker. Very cheap. You can buy multiple contracts. You can swing trade it stress free and not worry about losing too much because it's probably like only like 20 to 30 bucks a pop. Okay. All right. Next one is going to be GS, financials. Let's take a look at this. All right. Financials have been rocking and rolling since earnings. 3 solid green candles here. Very, very bullish. But we're stepping into a resistance here. Okay. Here's your resistance right there. So I'm using the wicks because it can be considered a double top, right? Most of the time when we see this, we'll get that little pop like this, right? And then that becomes a wick. And the next thing you know, you get that nice red candle that pulls back at least 50%, so 348, or even drops even further and creates a nice bearish candle like that. Okay. I'm not saying that start shorting, but consider not going long right here and consider maybe grabbing some puts because it's risk to reward, right? Look at the way that this move has been happening. All right. So this is the spreads are wide, so you have to be careful. The strength is strong, so you're going up against a moving train, but the pattern is there that can potentially be formed, and the level is very, very simple. 358.62. So your range can be like you can enter puts at 358 with 360 as your stop loss. Why 360? Because 360 is a psychological number. Technically, when a lot of psychological numbers hits, a lot of investors, traders like to take profit or enter new positions, whether it's going to dictate the long side or the short side. Okay. But once we break that psychological number, that's when you got to think, okay, this is not going in my direction. I got to get the heck out. Or it's going in your direction. I got to make sure I stay on top of it and trail my position. So again, this is a very, very simple trade that can go to either direction. It's either going to pop above or break that back down on the rejection of 358.62 and be considered like a double top. Okay. Remember, this is a moving train to the upside. We have a potential double top here. We have a potential slowdown on GS. The spreads are very wide. It's high risk. So if you're going to leave, if you're going to try to enter a put position at 358 or 360, your stop loss would be 360. Okay. No excuse. But yeah, that's the plan. Whether we're above, below the pre-market, wherever it's at, whatever the pre-market is, just go short below it. Okay. And then your targets will be whole numbers 355, 350, 345, 340. Okay. That's it for GF. I want to show you guys one more thing. The VIX. I think I talked about this the previous time that we broke it down on a YouTube video. Sorry, I didn't make one last week. But look at the rejection and the characteristics. Every time we rallied, drop, rally, drop, rally, drop. I don't have to point out every single one. But look, even since the beginning of the year, we haven't gone above that 35 or stayed above the 35 to create a green candle above 35. Characteristics will always remain the same around these levels as when things start to cool off in the market, whether they drop down or whether they push green. I want to show you guys here how clear it is. The past 1, 2, 3, 4 weeks, 5 weeks, it's been red. So the volatility is dying. Okay. I know we're experiencing a lot of catalysts and things like that, but those catalysts are not as great or in severe levels where it's going to create more selling pressure. The selling pressure has slowed down drastically these past 4 weeks, this past month. Okay. So keep that in mind. All right. I'm not saying that the bottom is in, but again, we're not dropping any further with selling pressure, nor the IV is increasing anymore. So keep that in mind. The IV in the contracts for SPY have changed drastically and they're back to normal trading. These are no longer at 100%. They're no longer at 150. These are at normal percentages. So we're back to normal trading, believe it or not. Even though we're experiencing some volatility intraday, it's not as aggressive as it used to be. So those of you who are entering like these bearish positions thinking that you're going to make tons of money, you're not, right? It's not the same anymore. So just be aware. Again, let me show you the VIX. The VIX is a fear index. So yes, the IV increases here up and down, but again, it's no longer above that 120%, 130. This thing was over 100% at one point where the selling pressure in the market and the fear was very, very high. Now, like I said, it's all back to normal trading, believe it or not. And the IV is cooled off and there's no more selling aggressive pressure. So that's why I'm saying that we may just stay here on /ES between this like 39 or even 4K down to this 36 and just go sideways to accumulate. So keep that in mind, guys. Be aware of what's going on in the change and the rotation of the fear and the balance in the economical world and movements versus trying to stay 100% bearish and not bullish. Consider going long every now and then. Consider getting out of your positions and not bag holding those put plays, or don't try to grab so many put plays, because I see it all the time. I see it everywhere. People are like, oh, I'm going to short here, I'm going to short there. Like when we hit this level, I'm going to short and I'm going to short. But guys, listen up. I just showed you based on the charts, the IV is not there anymore. The fear is not there anymore. Even though we are bearish still, okay, we're not in that fear mode anymore. Okay, so just FYI, keep that in mind based on the charts alone. So either way, you guys have a great week. Don't overtrade. Be mindful of what's going on with the charts and how the charts are developing. If you're a day trader, if you're on the 5-minute, your trade should be about 5-10 minutes. Okay. If you're a 15-minute trader, it should be about 15-30 minutes up to 45. If you're a swing trader, it should be overnight play, or you swing trade for the next 2 to 3 days. Totally depends on you how you're swing trading and stuff like that. So be aware, respect the levels, respect the time frames, and respect your risk management and the charts. Remember, if we're breaking above, go long. If we're breaking below, go short. If you're biased to any direction, make sure that you know what level you're going to stop out at and respect it. Okay. Otherwise, trade safe this week, guys. I'll see you guys in the chats. If you guys have any questions, let me know. If there's anything I can do for you based on supply and demand and trading with no indicators, let me know as well too. My DMs are open. You can find me at Conservative Collectors. You can find me on the Instagram, wherever you want to find me. Just feel free to reach out. Don't hesitate. Stay green, guys. Look out for the chip sector this week. Look out for Tesla, Shop, Nike, FDX, TSM, Meta, GS, AAL. Lots of great setups out there, guys. For now, stay green. All right. You guys have a good one.